Against that backdrop of anxiety and uncertainty, we revisit the ripple effects of the recently reached ceasefire on the South Korean economy as industry insiders here remain cautious. Our Park Jun-han files this report.
Local markets here in Korea have seen dramatic relief. On Wednesday, the benchmark KOSPI surged by 6.87%, followed by a minor drop of only 1.61% on Thursday. Although the market has rebounded strongly from its March low, it is still far from a full recovery. In energy markets, tension is cooling, but only slightly. We are seeing Brent Crude and WTI pull back from their recent highs, but the so-called geopolitical risk premium hasn't fully evaporated. Traders remain hesitant to place aggressive bets on oil, as a mere 2-week window is not enough to guarantee long-term stability in the energy sector. Meanwhile, the Korean won has been under immense pressure, recently hitting a 17-year low of around 1,534 won to the dollar. While the ceasefire helped the won recover some ground, moving back under the 1,500 level, volatility remains high. Until a more permanent resolution is reached, the dollar will likely remain the preferred safe haven, keeping the won in a fragile position. Timing is also critical as the Bank of Korea is set to meet this Friday. The big question is whether this short-lived ceasefire changes the calculus for a potential rate cut. Even if oil prices stabilize for now, it takes time for that to be reflected in consumer prices, and so the central bank is expected to be wary of cutting rates too soon. For now, the market consensus is that the bank will likely hold the rate this Friday. Experts suggest that for a rate cut to happen, the war must end and supply chains have to recover to pre-war levels. Furthermore, South Korea's high household debt remains a crucial factor impacting the BOK's future decisions. The ceasefire has bought time to observe, but it hasn't solved the underlying inflationary pressure. Korean companies, especially in the shipping and refining sectors, remain in a wait-and-see mode. Regarding the reopening of the Strait of Hormuz, a sea route crucial to the country's imports, there is still no guarantee of total normalization. Insurance premiums for shipping through the strait remain high, and logistics costs won't plummet overnight. For Korea's economy, the biggest risk to avoid is stagflation, a situation where growth slows while inflation persists. That risk is likely to continue until supply chain uncertainties are fully eased. Park Jun-han, Arirang News.